4:30. I declare the May meeting of the Finance Committee formally open. I'll first of all call for apologies, and I have received apologies from Councillor O'Leary, Councillor Bunting, Mayor Southgate for lateness, and Councillor Hamilton for early departure.
Passed on to Narelle. I may have to leave early, around 2:30ish the latest. So hopefully we're very efficient today.
Don't say, that's noted, Councillor Sarah. 2:30. I'm sure Councillor Ryan's thinking about 4:30 for his early departure. And we have on Zoom Councillor Kesh and Deputy Mayor Jeff. So can I have somebody to move the apologies? Thank you. Councillor Wilson, seconded by Councillor Maxine. If you could put your little badges up, please, and your cards too, so you're actually able to vote. Okay, so we move on to confirmation of the agenda, and the agenda run sheet has been distributed. I will move that we follow the agenda in the order that it is. I've had no indication of any reorganisation, but we'll bear that in mind as the meeting progresses. So I'll move confirmation of the agenda. Do I have a seconder? Thanks, Councillor Ryan. Those in favour, please say aye. Aye. Against? Carried. Declarations of interest. Are there any? No? Okay, let's move on to public forum. We have no speakers in the public forum. Okay, confirmation of the finance minutes, open minutes of the 23rd of March. That's item 5 and page number 6. Thank you, Councillor Maxine. Do I have a seconder for that, please? Thanks, Councillor Ewan. Are there any inaccuracies? Any discussion? Those in favour, please say aye. Aye. Against? Carried. Okay, we move on now to item number 6, which is the Capital Monitoring Report on page 13. And welcome to the table, Ian. And ask Ian if he could speak to his report.
So, good morning, Councillor Rob. Good morning, councillors. Talking to the Capital Monitoring Report for the period ending 31st of March 2021. That represents the 9-month period for the year, the 3-quarter mark for the year. We are sitting at expenditure year to date of $158 million. And that's again just an indication of the uptake we've seen in spending over the last 3 years as the capital expenditure program accelerates. The same period last year at 141.6, so we are ahead of last year, as you would expect given the larger program this year. We're looking really good when we measure it against our end of year forecast, to that end, the biggest impact on that capital forecast is the level of deferrals, and I've reported over the past 2 reporting cycles that we expect those deferrals to sit at about $65 million come 30th of June, and continuing analysis and monitoring of the budget suggests that we're still on target to make that the level we will be reporting to you. I am now going to bullet point that with just one point though. Look, we are aware there is one substantial land purchase in there that we anticipated to be resolved by 30th of June. That's a land purchase out in the Peacocks area. It's quite substantial. If that was unable to be secured and get the financial transaction through by 30th of June, unfortunately that would add to the deferrals, so and that number would push up. But generally, to speak, the numbers we've been reporting to you over the last 2 cycles stand, and we're not deviating away from the $65 million. In terms of things to focus on, I just wanted to quickly talk about work in progress. This has been a topic that's been raised again at the prior sessions. Currently, the work in progress sits at $402 million. And I've said previously that that is a large number. However, we have got a very large capital program, and that number should not be seen as a bad number. The number I always ask you to focus on, or the organisation needs to focus on, is the work in progress. This is outstanding. And why is that? Because that is the work in progress that represents assets that have been completed and are in service but are yet to start depreciating. And that continues to be the organisational focus to get that resolved by 30th of June. The reality is it is a large, complex project with many, many moving parts and many people involved. And the organisation, while focused on it, there is a lot of work to be done between now and the 30th of June to get that achieved. What I can say, though, is that generally the accounting impact, purely from a financial point of view, is the impact from work in progress not capitalised is you're understating your depreciation, i.e. depreciation should be a bit higher than it is because the assets haven't been capitalised. The finance unit acknowledged that, and they're making an assessment on what the value of depreciation is associated with that level of outstanding WIP, and that's coming through your P&L, your statement of comprehensive revenue and expense, if you want. And so it is not currently distorting your bottom line or your balance in your books results. So when Tracy talks to her report, there has been an allowance made for that, so that we are not understating the position and giving you a false position of where we are. We continue to list the projects we believe are at risk from the 8 programs. You'll see the list is a little bit shorter than previous reports. We're down to 5 now. 4 are existing, 1 is new. I'll just talk very quickly to the new one. The new one is with the start of the Ruakura Road urban upgrade. We've listed that. The issue there that we're making you aware of is that there will be significant traffic management around that project, including staged road closures throughout the second half of the year. So again, the risk really is it's a big project and it will have significant traffic management, and so we're just making you aware of that. We've also made you aware through this report of Council's intention to accept a land purchase that was agreed through a PDA that Council entered into in December 2019 with Kirkdale Developments for land around the Rotorua Village. So there's a piece of strategic land there. It's a 2,400 square metre parcel of land within the precinct, and the agreement allows us to buy that. We've got to make the offer prior to September this calendar year. It is a strategic piece of land. It's land we need, and so we are going to enter into a sale and purchase agreement with Kirkdale to purchase that. The price is excellent. It's $2,019, just short of 1.1 million in $2019. We will adjust for CPI for that, but anyone who's keeping an eye on the economy would know that even 2 years ago, the CPI movement over the last 2 years is negligible. It's sitting at circa about 2.5%. So we have quoted what we believe the final number to be, but we'll confirm that once we get into the final sale and purchase agreement. And again, it's budgeted. So again, we're just making Council aware that we are going to take up that offer. The last issue I was going to talk to you today about was we've brought, under the emerging risks section, we've brought the national policy statement on fresh water back to the table just to make your awareness. If we just jump back to the risks area on the project risks, you'll see that we're still listing Turakina Rise there as a risk, and now it's really as a timing risk now. That project was set to go. It was delayed because the freshwater MPS had stopped us doing that because there is a water gully that's in that vicinity, and that, so we've had to stop it for that. And it's raised the issue with what is the impact of the national policy statement of freshwater, not just on that project but certainly across the board. And you'll see in the report I've said that it's been discussed at various levels throughout this organisation and with regional council as well. And we've got I've got the General Manager, Luke O'Dwyer, behind me if any questions want to be raised on that, but the intent really is to come back to council. Oh, sorry, what? Oh, there you go. I'm getting my head myself here in a minute. Apologies. But the intent really, because this issue is quite large and it's quite complex and has the ability to have an impact on not just the growth delivery program, but certainly on the financials in terms of the costing of some of these projects and what it's going to do. We're going to come back with a more comprehensive report to a future committee. But in case there was any immediate questions today, Luke's in attendance and General Manager, get that one right, Chris Allen's here as well to speak to.
Thank you. Thanks.
So I'll leave it at that, and I'm happy to take any questions on any points that are raised or any other issues or any other content within the report.
Thanks, Ian. And before I call for questions, can I suggest that if we're going to have any discussion on the Rototuna land purchase, that we limit the discussions to the land purchase and the financial effects. I could see us getting into quite a long discussion on the detail and design, which of course is something that will presumably come up at a later date in Dave's committee. So, questions? Councillor McPherson.
Thank you, Chair, and apologies for slight lateness. And I'm going to break your rule immediately, but not going to go into design, but it is a question relating to the Rototuna land purchase for temporary transport logistics, temporary being until HT1 is built, which is open, which is at least 5 to 10 years. But I want to check it with either Ian or Chris whether the zoning of that piece of land is commercial or allows us to do things in future other than what it might be initially pitched for, if I may ask that question.
So that's on the basis that if the land doesn't end up being suitable in its position, we might sell it and buy
or suitable
something.
long term, it may have
we might sell it and buy something else. I'm happy with the financial effects around the purchase. I was just thinking that we could end up with an hour-long discussion on what it might physically look like, and that's something.
It won't be as bad as the Eastern Pathways one. Who's going to answer that?
Well, through you, Chair.
Yep, sure.
Through you, Chair. Councillor McPherson, my understanding is the location of that is in a residentially zoned area. It's all area that's zoned for urban development. If I understand your question, if that's not needed and can we put it back on the market, is that the thrust of your question?
No, it's not quite. That's why I would have expected Chris to have answered it because he was aware of the issue. Sorry, no offence, Luke, but
None taken.
Chris was trying to wriggle out of it, obviously. Yeah, that's right. No, simply that it has a proposed use in the early days, like within months potentially. But if it's longer term, it's not needed for that purpose to do with public transport. Could it be on-sold as a commercial piece of land?
Yeah, I believe so.
Yeah, that's what I'm checking, but the zoning allows that. So it has a inherent value that's commercial.
Yes, and I suppose equally there would be a matter for the council to make a decision on, and then equally thinking strategically about that piece of land, depending on the will of the council at that time to make that decision. We would look at the planning provisions. Do they align with the council intent of that? If they don't, there's other processes we can go through.
Mine's much more simpler than that because I'm not paying planners' wages here, but I simply want to know that it's not zoned solely for transport logistics. Okay, fine, thank you.
So if I can just add to that question, I assume the value, when we agreed on the value, it was on the basis of its status at that time, which hasn't changed.
I can't answer that. I wasn't involved in that.
Yeah, so it's my understanding, Councillor, when it came to Council in 2019, it was supported by valuations of the land use at that time. So this price has been supported by valuations in 2019.
And nothing's changed in the meantime?
Apart from Ian's view, I think land is escalating in value. So
but the designation hasn't changed in terms of the status of the land?
No.
Okay, you're all set there, Councillor Dave. Okay, next question from Councillor Ryan.
Thanks, Chair. Just on that NPS, possibly again for Luke, on that Turakina rise and how it's, sort of stalled things. What's the risk in terms of budgets, finance, and has it flagged any other projects that are work in progresses with that NPS?
Yeah, if I can pick that one up. So I think at this point in time, the issue has just affected the one direct project for us, which is Turakina Wise. We are working through that, and we think we've got a solution. Having the land purchase we just talked about will help us just work our way through that one. The risk is a generic risk about growth that we're working through as an organisational process. So Luke has been leading the charge and talking to regional council, and it's a bit of a national issue and how you interpret this national policy statement. So I think we're all in it together, regional council and district councils, city councils, how you interpret this national policy statement. I think reading between there's been some unintended consequences of how it's been written, so we're just working through that. So at the moment I'm not aware of any direct impact on any particular project, but I think it is a significant risk just for growth in general.
Okay, thanks.
Thank you. Councillor Serra.
Thank you, Chair. My question is in regard to the Rototuna land purchase and keeping it within the financial scope. Chris, do we have within that unspent mass transit budget the budget or to put in the facilities, the very basic facilities needed to service that Comet route?
The budget we're proposing this year is just sufficient to purchase the land. So there's no. I'm just trying to think. I don't think there's any budgets for development of that land, but I just need to check back with the community group. I'd have to come back to you on that one. Whether it's wrapped up in the whole Rototuna town centre development. I don't think it is, but I just need to. I'm getting a nod. So no, we don't have a budget to do anything there. It sort of ties in with the comment that we haven't come to council with a macro scope or how we want to use that land as well. So we haven't. It's purchasing the land and future-proofing our opportunities.
Okay, is there somewhere that conversation could continue just in terms of ensuring that the very basics that they're needed, which I understand is driver facilities, is available at the right time to start the Rototuna rocket?
Yep, we'll make sure that conversation happens. I think the parent conversation is probably happening around the community committee, but I think there's a transportation conversation that needs to happen to support the Rototuna Town Centre development.
Okay.
So we'll make sure that happens.
That's noted. That would be useful. Thank you.
I think Dave's got a response to that.
Sorry. No, not a response, another question. In my excitement over getting a straight answer from the planners, I forgot I had a second question, which relates to the Waka Kotahi subsidy. It says funding, purchase will not attract a Waka Kotahi NZ Transport Agency subsidy, though then it floats the possibility of that maybe retrospectively. This is sort of an issue that's come up before, and we've said on occasions to staff, and I want to know whether that could be said this time, notwithstanding the fact that they say they haven't got any money and you're not likely to get it, should we not, because it's a legitimate reason, it's for a transport logistics place, should we not be applying anyway? So that's maybe a question to Chris, I suppose. That I can't see why we wouldn't apply for it. We've got a case.
Yeah, so I'm basing those statements on just past practice where the purchase of the land would need to be anchored into a business case of an actual project that's happening. So we've never before got a subsidy for land for a future project. There are advantages, Councillor, for us applying for the subsidy at a future point in time as well. In particular, in this land here, if there is a project and we apply for subsidies, we'll be applying on the escalated value of the land. So if NZTA were a co-investor now, they would be a winner on the escalation of the land as well. So you might recall it was quite significant on the Ring Road when we got the retrospective subsidy there. The land which was bought many years ago had quite a significant value where we got half subsidy on. So there's pros and cons for having them as a co-investor. I think it would be very difficult to do it without it being anchored in a business case.
Okay, so what's the time, sort of following Sarah's question, what's the timeline for doing that business case, and how can we ensure that a future council, say 2 or 3 years' time, does actually recognise there's a hook in there to get Waka Kotahi money?
I think it'll be tied up with Sarah's question and bringing that back to council. I've got Eva Lisa sitting beside me telling me that there is some work already underway with regional council on that. So I think if we can bring that back to Transport Forum, we'll make sure we address that issue.
Transport Forum.
Be
Back
the
through operations. Back through
infrastructure operations.
What about the Connections Committee, because it's got a tie-in with the Rototuna direct bus service, for instance?
Yep, so Eva Lisa is nodding and saying yes, both. Yep.
Okay. So just following up Sarah's... You're getting a lot of help from other staff today, Chris. Following up Sarah's question about the money for other infrastructure that might be needed to support, say, a service and the use of that land, this 1.130 million is coming from the sort of mass transit fund that we had in the old, about to go out of date but not yet, LTP. Could you tell me how much is left there for mass transit? Because if we can dip into it and grab 1.130 that wasn't specified, it's just a, as you say, general purpose under the Chief Executive delegation, what else might there be in there that could be used for the use that Sarah described?
I'd have to come back to you on that information, but my recollection is that this probably depletes the funding for this financial year in that category, but I'd have to go away and check that.
It would certainly deplete it if it was 1.13 off, but would it wipe it out? It's really the question. Is there still 150,000 left for instance, a Portacom lunchroom and toilet?
Yeah, so with so I think it would take a little bit more work to do that, Councillor. We'd come back. The opportunity is always there for Council to defer any surplus funding into the next year. But remember, we've only got 6 weeks to go to the end of the financial year, so we will come back.
That's why it'd be excellent to know right now whether there was any that could be deferred.
But there'll be a standard process that we go through in Council for the whole capital program and deferrals at the closeout of the financial year. So yeah, this will be the last finance committee before the end of the financial year. No, there'll be
there's another one in June.
Yeah,
okay.
There's one in June.
So could we ensure that if it doesn't come up otherwise, that it comes up in that issue comes up in your next committee, Mr. Chair?
Yep.
Yeah, and can I suggest as an add-on to Councillor Dave's question, we've got the hub opening in May of next year. It would be spot on if we had the bus service running out there at that, to coincide with that particular date, which might then necessitate having whatever infrastructure we can afford to put on the site, so that it works from day one.
Yep.
Of the hub being available to the community.
Yep. I think clearly we all agree on that objective. Yep.
Okay, sounds good.
Thank you.
Okay, now I've got a couple. I don't see any further questions, but I've got a couple of questions here. One is around around the work in progress, Ian. Your report says at the end of March the work in progress that that can be capitalised and depreciated is around 86 million. That's in paragraph 29. Can you give us an update on where we are at now, given that, you know, we're sort of 6 weeks down the track from the 31st of March, and as has already been indicated, only 6 weeks away from year end, to getting to what that balance currently is and what the target is come 30th of June, and Tracy might be able to help us with that one, as to what the work in progress that should have been capitalised is likely to be.
I can give you an update, but without dazzling you with numbers in terms of what that number has moved on since.
Well, dazzle
since
me
this
with,
report,
certainly I'd like to know where the 86 million is now.
I could come back to you outside of this meeting with an up-to-date number quite quickly, Councillor Pascoe.
Have we dropped it significantly? I mean, 86 million is quite a big number at March.
What I will say is, yes, it's a reasonable sized number. However, if you do start to get into the analysis, a lot of it is sitting in the transportation area. Also got to be aware that we've got a asset revaluation that needs to leverage off this data. Yep. So the capitalisation is very much intertwined with that revaluation, and as I said, just in the last couple of weeks, they've stood a team up on the in the transportation unit to really light a fire under this and to give it the resource needed. But that's just words at this point in time. What I will do though is between Tracy and myself, is we'll come back to you and the rest elected members with an update on where we are as at the 30th of April, if you would like. And a little bit more narrative, that would be of assistance.
Yeah, I mean, I'm conscious of audit, you know, the external audit at the end of the year, and I'm absolutely certain that that'll be one of their main focus areas. Will be to look at what we could have or should have done by the end of the year in terms of getting that figure as low as possible.
Yeah, exactly. And look, we spoke as recently as this week to Audit New Zealand around that, and what would be a number that would cause them concern, and anything above 10 million would be an issue for them. Yep. Equally, they're going to also look at our processes and that behind what's doing that. So again, that's where the focus is at the moment, Councillor Rob.
Okay, thank you. And my other question is around the freshwater compliance, which I think previously we've signalled as potentially a costly compliance area, given that it's new, and we've had a bit of a suggestion this morning that some of the areas, I think from Chris, are not as clear as we thought they would be. Are we making generally good progress in our relationship with Waikato Regional Council, you know, to identify where the hurdles are, and how we will, because I know that they are the regulator in this regard, as to how we might mitigate some of the hurdles and be able to get on and do what we have to do and what will be in compliance with the NPS for freshwater.
Short answer is yes. We're working very constructively with them on not just the Turukina Rise project that you heard the General Manager refer to earlier. That's progressing pretty positively in terms of the dialogue. We're yet to get the clarity on the outcome, but I just want to say that the region are just doing what has been given to them by the government. So that was a whole new regime thinking about consenting projects in areas that are where there's fresh water, and it took immediate effect at the time it was made in September last year, and it's a national problem. And the work that we're doing with the region, not just on this particular project, but what it might mean for other projects and how we think about projects going forward. We're working collectively with them on that, but equally we're looking at what other implications there are for broader growth issues. And just last week we had a half-day workshop with the region, and we're working really constructively with them. We're taking all of the learnings from all of that and pushing that up to central government. So there's a lot of messages that you're hearing right around the country from large infrastructure providers, from large developers that are giving urgent dialogue to government to say, look, there's some unintended consequences as a result of the drafting of this MPS FM. So no one disagrees that freshwater management is really important in New Zealand and everyone wants clean waterways. But there are certain aspects of that are proving challenging in terms of the implementation on that I don't think were intended by the statute. The government's hearing that message. I understand they're looking at that. They're looking at that urgently. They're looking at it as part of the RMA reforms. I will keep monitoring to see whatever progress comes out at a national level, and we'll continue to work with the region. And I think, as indicated in Ian's report, that we'd look to either have a briefing on the outcomes of that dialogue, either through elected member briefing or a report to the Strategic Growth Committee.
Have we budgeted sufficient costs to, given that it appears it's becoming a much more expensive exercise than perhaps what was initially thought?
In the land use space, we've taken it into account, certainly, and this organisation and the work being led out of the development group has, in some ways, really anticipated the step change around freshwater management, because we have the vision and strategy in the Waikato, which is really different to the rest of the country. So a lot of the work that was being done in, so for example, the ICMP to support Peacock, we believe is really addressing the intent of what's needed in there. I can't comment on the individual project level, and I think, as Chris outlined earlier, we know we've got an issue in one, and we haven't seen any other particular issues come up, and it's something that collectively between the groups will be monitoring, and when we know something, we'll come back.
Okay, thank you. I see no further questions, so I will move the staff recommendation is that the Finance Committee receives the report. Do I have a seconder, please? Thanks, Councillor Ryan. Is there any debate? See no debate, so we'll put the matter to the vote, and we'll do that by a show of hands, please. Those in favour? Against?
The motion is carried unanimously.
Thank you. All right, move on to the from the Capital Monitoring Report to the Annual Monitoring Report, which is the second report in this trilogy. Welcome, Tracy.
Good morning, everybody. Thank you, Chair. So I'll take the report as read. So just a couple of things to highlight today. The difference between this report and the last report that I brought through to committee. We have spent quite a bit of time just looking at our forecast and trying to determine what our end of year June balance will be. So there were a few key changes in that space. One of them in particular around the Waikato Regional Theatre. So we've rephased that. It was also picked up as part of the long-term plan, which we obviously talked about last week. So with all of those changes, it is still looking very favourable for that June year end. The difference between the year-to-date actuals that you are seeing, though, especially around in the balancing the books space and that June balancing the books number that we're forecasting, is we do have quite a few year-end provisions that come in, like landfill provision and things like that. So there are some big movements still to come through and flow through the accounts. So just with regards to the Treasury space, you'll notice that we've moved back into being compliant with our fixed hedging. So there was a couple of reasons why we did that. One of the things you'll remember I've talked about over the last wee while is around re-looking at the policy that we've got, our investment and liability policy, and determining whether or not those rates were appropriate. After quite a few discussions with PwC and working through that, we've decided to keep the policy as it is. The feeling that I was given is that it very much, the last sort of couple of months, is a one-off kind of situation, and obviously they were quite low. So they are comfortable, and I am now comfortable that our policy is correct. However, there will potentially be times, like there has been in the last few months, where I breach it for what I think are very good reasons. So hence we've decided not to change that policy. And you'll also notice that I've done a couple of fixed pieces for the next 5 years as well. Again, not necessarily, the intention wasn't to bring policy, it just happened to work out that way. But again, after discussions with PwC, looking at some of the New Zealand interest rate swap curve and those sorts of things, and where the economy is going, we decided it was a good time to just kind of pop in two $20 million fixed swaps for that.
Rather than floating?
Yes,
Yeah.
yes.
Okay.
Yeah, and again, we only do it short term as well, because the long-term interest rates are obviously still very uncertain. So we only did them both. I split them in the end and did two for 5 years. So,
Okay.
yeah.
Thank you.
So I will take the rest of the report as read and happy to answer any questions.
Thanks, Tracy. Councillor Ryan.
Thanks, Chair. Tracy, I note that the investment liability policy, according to our website, was due to be reviewed next month.
Yes, we did it in December. I brought it to you early.
Okay.
Yep.
Okay, so that needs to be amended.
Amended,
I guess.
yes.
But,
Yep.
I know we've had some offline discussions about whether fixed rate swaps are still fit for purpose with council, given it's such a conservative environment.
Mm-hmm.
Did you have an opportunity to talk to PwC about perhaps investing in conservative KiwiSaver funds or something that might deliver a better result?
No, because I have my meeting with them next week, and that's on the topic to talk to them about, so I will do, yes.
Okay, given that you've just sort of made the commitment to keep $40 million in that rate, is there any opportunity for any other funds that council's got to look at alternative or innovative fixtures?
Yes, absolutely. So remember, we're only still 40% of our borrowings fixed, so we still have that money, and obviously we still have the endowment money and cash that we look after separately as well. So yes, there is opportunities.
Yeah, no, but the endowment money is separate from this conversation. But in terms of council's fixed opportunity, what sort of quantums have we got that we can play with or invest in?
So I think...
I changed my words, actually. I shouldn't say play with or invest in, but
So
look at alternative means of...
Yep. So if our borrowings are up to 500 and... what's the total number? Just over 500 million. So if I've got 40% of that fixed, the rest is obviously we can do different things with if we wanted to.
Just in terms of, if I could, is it maybe a staff action? Will you bring some clarity back from those conversations with PwC?
Absolutely, yes,
Yep.
absolutely I can.
Okay, thank you.
Not a problem.
Okay, I'm looking for further questions, and I don't see any, but thanks, Ewan, yours has just come up.
I'm sorry. Thanks, Chair Rob. Tracy, on page 44, I'm just needing some better understanding of the operating result
Sure.
and the positive variance of 50 million. So what we're saying is, just walk me through what we're saying. We're saying that revenue generated by DCs, etc., are higher than we were expecting.
Yes, so if you could probably go to page 53, it's probably a little bit easier to see in the detail on that page. So this is what we'd call a profit and loss, and it doesn't quite show the balance in the books. It's a little bit trickier to do that, but that's on the following page. So you'll see that $50 million favourable variance down the bottom there. So it takes into consideration all of our revenue, all of our expenditures, and then you'll see there what we've got coming through, which very much affects the accounting result, is those development contributions and of course the capital revenue that comes through that we get for obviously funding the capital projects.
Right. So help me just understand this slightly better in regards to the item before this, where we were saying that in terms of capital spend, we haven't achieved all of what we wanted to achieve. But on income-wise, we've got higher revenue from DCs than we had planned. In theory, there should be a correlation, right? Because we are, on one hand, charging developers for infrastructural spend, DC flows in, but on the other hand, we're not actually delivering the infrastructure which we've charged them for. Walk me through that.
So you are exactly right. So that is one of the differences in being in a local government. So all of that capital money and all of that DC money, it does come, and you have to account for it in that financial year. So I think once upon a time they used to talk about jam jarring it, so putting it on the balance sheet and letting and releasing it, and when it was appropriate for those projects. We don't do that. It's not done anymore. So the timing, so if you think, right, true revenue versus expenses, doesn't work in the capital space.
Right. One last question, and it's probably a really silly question. You know how year upon year we have these deferrals?
Yes.
Are the figures we see accumulative? If you go back 2 years ago, and let's say we deferred 50 million in capital, we assume that that was a timing issue, and in the subsequent year or years, those things are actually done. But then the next year we have the same thing, and it just goes on. Help me understand. Have we done the capital spend we thought we would do, say 2 years ago, that we charged DCs for in the subsequent years? I'm just trying to see.
Yeah, I understand your question. Yes, because we've delivered all of those capital projects that we said that we were going to do. What you're asking for is the timing of it. So while we probably said that we were going to do it 2 years ago, we might have only just finished it yesterday, for example. So under my awareness, and Chris can correct me if I'm wrong, we have never not completed or never not done a capital project. So it ends up being, to exactly what you are alluding to, it ends up being the timing of when that spend flows through the accounts.
Right, I actually have one more question. Can you name any capital project, that is outstanding or beyond the timeline we had thought of more than, say, 3 years?
That's a Chris question.
Yeah, I'm listening. I'm trying to think. No, Bullman Road wouldn't be an example, because that was, the funding wasn't in the right year. So the councillor's question, are we funding a project, then just shifting it a year, then shifting it a year, then shifting it a year, and not doing the project? So generally, we are doing all of the projects. We have, if you take the current example, the transport centre, so we had planned to do that in year 1, and we're ending up doing that in year 4 because of business case reasons. So that's close to your 3-year trigger. That would probably be the most relevant example I can think of, and probably the most extreme one that I can think of just on the hoof, councillor. But generally, look, in every 3 years when you do your LTP, there's a complete reset of your program anyway, and then this year you've had a very thorough look at every single project. Every 3 years I think you get to see that and reset your program.
And is there any document that either I haven't read or you could point me towards that would quickly enable a lay elected member to see where that is, in terms of, hey, council, we charged a whole lot of DCs here, we said this was going to be done in year X, but in fact we haven't, and here it is, so that we could just go and summarise? Because when people call us and say, look, we're paying DCs but the work's not being done, we can say, no, you're right, but it is being done in this time frame. Is there one simple document?
Yep.
Good.
So,
where is it?
So we've changed our whole style of capital reporting over the last 3 years. So before it was really hard to see that, but the style of reporting that we've adopted over the last 3 years, you should be able to see that. It's my intent when we come back at the end of the 3-year period, which is the end of June, so our next report after that, that we want to have a look back over the last 3 years to say, what did we set out to achieve in the 2018-21 period, and what did we actually achieve against what we set out. So I think that document will achieve what you're looking for, councillor.
Okay, thank you very much.
Thanks, councillor Sarah.
Thank you, Chair. Tracy, I was just interested in the fact, for example, we're 7.8 million favourable in terms of fees and user charges. As an example, is this partly because we were more pessimistic when forecasting due to COVID?
Absolutely, yes, that's exactly the reason. So you'll remember at the time when we were making those annual plan changes, during that time, we took quite a conservative approach around what level we would be in. So we not only did that and dropped a lot of our expectations around a lot of our visitor attractions and the H3 space, for example. So, but in saying that, we've not only have we come back and reached what we probably would have had in our existing annual plan if we hadn't made those adjustments, in a lot of cases we've actually done better. Than what we have because of obviously local tourists and things like that. So we're definitely seeing quite a positive thing coming through in those fees and charges.
Wow, okay. Thank you.
Thanks, Sarah. Councillor Ryan.
Yeah, just to follow on from Councillor Ewan's question for Chris, if I may, just around that DC. I got the impression that you said all projects are done within a sort of a 3-year time frame. But I thought with Rototuna, for example, there were DCs collected with the library for 15 plus years before we delivered on those capital projects.
Yeah, sorry, my question was, my answer was sort of related to the delivery of the projects, like collection of DCs. You're right, that's a different issue. Like some, we collect DCs on projects that we haven't done yet, which are in the 10-year plan. Some projects are in a 15-year sort of strategy. So I think it's a slightly different issue. We definitely collect DCs for projects over a longer period of time.
Okay, thanks.
Thanks, Councillor Ryan. I'm not seeing any other questions. I've got a couple of questions. Just and a follow on from Councillor Ewan's one. Am I right, and this might be to Ian, paragraph 22 of your report, you've got a line item there called less deferrals and brought forwards. Is that the net figure that I think Councillor Ewan was referring to in terms of, is there a figure somewhere which actually reconciles the deferrals from a previous year that are now been expended in this year, and the deferrals that might be moved over into the following year or years within that kind of 3-year bucket that Christine spoke about? I hope I've made myself clear.
Yeah, I think you're exactly right, Councillor Rob. That's what it is. We do spend a lot of time and effort making sure the numbers are fully aligned. So when we talk about a 65 million deferral coming out of this year, it is a cumulative, Councillor Wilson. It's not just this year. So if you wanted to think about a capital program as a 3-year rolling program, you could argue that we're going to get to the end of a 3-year program and the underspend or the under-delivery is only 65 million on the basis of that. So that's what the number is. Attachment 4 in the report I've presented gives you a little bit more detail and granularity around what the value of the deferrals are against each of the individual programs. And if wanted, there's actually detail further below that. But one of the things we do always monitor is not just moving the money out of the year, it's where do we move it to, and understanding the impact it has on future deliverability programs. So you never should make the assumption that a deferral comes out of year 1 and automatically goes into year 2. It may go from year 1 into year 4 or 5.
Yeah.
And again, that comes down to how we're doing our programming, our deliverability, and understand the impact on financial strategy and affordability.
And if I may, and so we also pick that up as part of the annual planning. So as part of every annual plan, we're also reassessing the outcomes of what the annual plan, those changes are in capital, what that means for funding, for interest, for depreciation, et cetera, et cetera. So that's how we sort of reassess it each year as well.
So that's the 7.5 million in paragraph 22 of your reporting, and that's detailed in one of those attachments, is it? So you can actually pick up what's been brought forward from a previous year and what has been deferred this year until a subsequent year to net off at that 7.5 million.
Not quite. I think we just put the balance in, Councillor. Oh, sorry. Sorry. We just put the balance in without thinking. Look, clearly there's a significant amount of data back in the office we could produce something that
could that be easily summarised so we know? Presumably the 60 million is in there somewhere, but there's also been a lot of brought forwards that have probably been expended this year, which would offset that.
That's correct, yeah, because we talk about deferrals being, but not just the movement out to a future year. We're also looking in the way the program's managed, bringing approved projects from future years forward to give us that balance and that deliverability. I can certainly work on something I'll try to give more clarity around the issue if that's desirable.
I don't know whether it needs to be detailed line by line on every project, but maybe just the categories. And have that reconciled back to that 7.5 million. That would be quite useful because then we've got a watching brief on what's been picked up from a previous year and spent, and what is part of that, what has gone and how that 60 million has been.
No, agreed, because I mean, these numbers are quite critical, so I'm more than happy to put my thinking cap on and come up with a disclosure or a report that's going to meet those needs.
Okay, thank you. And just a couple of questions for Tracy. I take it in terms of the interest in fixing loans on our debt, I assume that now that we're at around about 40% and compliant with our policy, the balance of the 60% of our borrowing are all on floating rates.
Yes.
Is that?
Yes.
And I assume, is it correct that PwC, the Treasury Division of PwC, are constantly monitoring the market to see at what point they might advise us to start fixing some of that 60% if the interest rates and the market determines that that's the right thing to do?
Absolutely. So like I've mentioned before, I have a monthly meeting with the PwC team, and basically this is the report that they send me with all of their information around what they've done, what markets they've looked at, and all of the things that they've taken into consideration. So it's at that time where we talk through whether or not we want to do a fix of some swaps or what we're kind of looking at as well. So absolutely, and even in the conversations that I've had even just over the last 3 months, it very much used to be, no, let's just stay with what we are and purposely breach policy. However, that last conversation, obviously with changes in the market internationally and nationally, we decided that it was appropriate to fix that $40 million.
So given in the last couple of months they've recommended fixing rather than floating, is that signalling that there's a trend out there that we might be fixing more loans going forward than relying on the floating, which I think we've done over the last, say, 18 months or so because the market rates have been better for floating?
Yeah, and interestingly enough, when I went to do the 40 million, I purposely split it for 2 weeks just because of the timing and the difference between the two and the interest rates that I got over those 2 weeks between two different banks. So it very much is around the timing and what we do it. And genuinely, that is what they do all of the time, is reviewing what's going on and looking at obviously our portfolio, looking at our curves and our swaps, taking into consideration. So the next piece of work that I'll be doing with them is obviously taking into consideration what our borrowing forecast now is due to the long-term plan. Obviously, that's bringing a whole change to sort of what we've been reviewing and whatnot. So we'll sit down and have a look at that and what does that mean and that sort of thing. So absolutely.
Okay. And last question is around the revaluation of some of our assets, which Ian alluded to. I guess the question is, are there likely to be any surprises in the revaluation that might trigger a significant increase or decrease in the depreciation that you've currently provided for the end of the total for the financial year end? because I know in the past we've sometimes had surprises with the revaluation and the impact that that's had on, and I'm thinking of, well, land, but certainly land and buildings, which we've seen quite significant increases in the market anyway. I don't know whether it affects our market, but in the marketplace over the last couple of years.
Yeah, so land and buildings, I'm not expecting huge because we have been revaluing them every year. So I think the shift change from year to year isn't going to be as great for those particular asset categories. The one though that I am actually really unsure of is our transport revaluation. We haven't done that for quite a long time, and as you know, it's thousands and thousands of assets that we have to sort of work through. So I genuinely have a meeting this afternoon on what we were at and what rates they're using and what that is potentially going to look at. So obviously we've budgeted for a certain percentage increase, so I'll be sitting down with the team this afternoon to figure out what that actually is going to potentially turn out to be. So,
Okay.
so because it is such a big change in timing for that one, I actually don't know.
Okay, but you might have that figure for the next finance
will,
meeting,
most
which will be
definitely.
before year end.
Absolutely,
Yeah,
yes.
okay, thank you. Not seeing any further questions, so let's go to the staff recommendation, which is that the Finance Committee receives the report. Councillor Ewan, have a seconder? Yeah, thanks, Councillor Maxine. Is there any debate on the annual monitoring report? No debate. Okay, we'll do this also by a show of hands. Those in favour, please raise your hand. Against?
The motion is carried unanimously.
Thank you. And we now come to the last of the three reports, which is the Financial Strategy Monitoring Report, and that's on page 70. And you're going to present that, Tracy? Still seated at the table?
Thank you. So this obviously is just summarising the last two reports that you've heard this morning with all of those forecast changes. So a little bit more this month with regards to the operating changes. A full list of those you'll find on page 75. So the recommendation to Council today is just approving all of those for our forecasting purposes.
Are there any questions? Councillor Ryan.
One, hopefully straightforward. Given, I think a lot of this favourable stuff is around deferrals.
Favourable.
Debt to revenue is favourable against
Oh,
the budget.
yes.
So I'm just wondering, is there a risk that some of these deferrals balloon towards our LTP conversation? Are we looking good in terms of, is that deferral lag factored into that,
Yes.
Thank you.
Into the graphs, yeah.
I know what you mean. Yeah, of course it is.
Very good question, because it is something that we can overlook at times, yeah.
Yep.
But
Yes, it is.
Yep, thank you. No further questions, so let's go to the staff recommendation on which is paragraphs 3 and 4 on page 70, and I'll move. Do I have a seconder? Thanks, Councillor Ryan. Is there any debate? No debate. Those in favour, please raise your hand. Against?
The motion is carried unanimously.
Thank you. Item number 9, which is the library's RFID, Radio Frequency Identification Service Level Agreement. Welcome, Rebecca. Not Lance, Rebecca.
Morena councillors, I'm just presenting this paper today on behalf of Stephen Penrisco, who's not able to join us. So the report seeks approval from the committee to award a service level agreement to support the delivery of RFID technology within the libraries. The maximum value of the agreement through the life of the contract would be $600,000. Procurement have recommended a 10-year term for the contract, which aligns to the useful life of the assets. And because this term exceeds CE delegation, that's the reason why this item is before you today. And just important to note that the expenditure is budgeted within and covered within the library's operational budgets into the future through the LTP. Happy to
Thanks,
take any
Rebecca.
questions.
Questions? Thank you, councillor Ryan. Okay, I'm not seeing any questions come up, so we have a motion on the floor, which is paragraph 3 on page 76. Is there any debate? No debate. Those in favour, please raise your hand. Against?
The motion is carried unanimously.
Item number 10 is the resolution to exclude the public. I will move. Thank you. Councillor Maxine. Any discussion, questions or debate? Those in favour, please raise your hand. Against?